if it's a little bright, that's as low as I can get it. And Sebastian is out of town this weekend with his wife, so I really don't know how the AV stuff sets up. So I appreciate your patience in advance. Let's go over here to the questions. Let's get things going here right away. And yeah, that light is bright, isn't it? Oh well, it's all about the content. And guys, like last week, if you want to support the channel, feel free to do a super chat, and Sebastian will text that to me, and I will prioritize those questions as soon as I get them. But starting off here, okay, looking forward to this. Silver, okay, gold, I'm ready to leave the state. Yeah, Nathan, I don't blame you, buddy. Let's see. Okay. All right, guys, when you have a question, please go ahead and put question maybe first in capital letters so I notice it, because we got a lot of back and forth here. That'll help me get to the questions a lot faster. Okay, Diana, that's the first question I see. Okay, what do you think is a good place to store wealth besides precious metals when we go cashless trying to protect my first home deposit? I know it sounds absolutely crazy, Diana, but I like old trucks, and I've said that a few times. And there's a specific year between 1995 and 2002 when they made Fords with a special motor called a Power Stroke. It's a 7.3 diesel. And the 460s are good too. Those are the gas motors. And so F250, F350, the crew cabs are great. If you can get one in a no rust state with very low miles, just search on Craigslist. That's what I did. I found them on Craigslist. Every single one I have, I found on Craigslist. Get it with under 100,000 miles. And if you can get it from a state like California, Arizona, Oregon, Washington, someplace that's notorious for not having rust, and then keep it. Just store it in your garage. Store a couple of them. And then when you're ready to sell them, just advertise them on eBay, take great pictures. And if you buy right, if you negotiate well, if you know what you're doing, you're going to make a premium. I don't care if you sell it in 10 years, 20 years, 4 years. It's a great store of wealth outside of precious metals. And you don't have any storing costs. So that's my best suggestion, as crazy as it sounds. Okay, Snyder asks, can we circle back to the question last week pertaining to the 401k? How do you protect it? Okay, so I haven't had time to do research on that, Snyder, yet, but I think it's all about what's in the 401k. So I've heard from other real estate guys, I've never done this myself, but if you could somehow take that 401k and without having the tax event and kind of parlay or take those funds from the 401k and roll it over into some single family rental properties in the Midwest, like I suggest on a lot of my videos, that's what I would do if that's possible. Okay. Okay, so Bonsai says that the 401ks are all different. So again, I don't know if you can do that with a 401k. That's something that if you can, that's what I'd suggest. Question, can interest rates go up even if the Fed? Yeah, absolutely they can, because, okay, sorry. So Warner asks, can interest rates go up even with the Fed intervening? Yes, absolutely. And this is a great question. I get it all the time. Because the Fed, to get interest rates down on the long end of the curve, the Fed goes in and buys bonds. They buy 10 years and 30-year bonds to get that yield curve to go to flatten out. Now, ironically, when they've done it in the past, the yield curve's even gotten steeper, but that's what they tried to do. So I put out a tweet today. If you guys aren't following me on Twitter, you should do that. It's just at my name. But I put out a tweet that because the Fed is increasing their balance sheet, they can't increase it. There's a limit to how much they can increase it, is what I'm trying to say. And obviously they have to increase their balance sheet to print the money to buy the bonds in the first place to keep those interest rates low. But inflation, it's all about inflation. If inflation gets out of hand, then the Fed is done. They can't, there's nothing they can do because they can't expand that balance sheet further without interest rates going even higher, because people and investors think, oh shoot, they're expanding the money supply. I want more interest if I'm going to buy that debt. So I put in that tweet that it's because, as you guys know, the Fed is trying to create inflation. You know, they've got this inflation target nonsense. And if you guys saw my video from the other day, Brainerd even came out and said and I think Powell said this as well, that they just want to average out inflation. Meaning, that 2% target, that's kind of old school. We want to make up for lost time. So if it runs hot, if it goes up to 5, 6, 7%, well, that's okay, because it's all going to average out to 2%. So basically, they're saying that they want to run the economy hot, but it can run too hot. And if the inflation genie gets out of the bottle, they're not going to be able to print anymore. So going back to that tweet, I said that it's basically like Superman is trying to create his own kryptonite, and that's what the Fed's doing, in my opinion, by trying to stoke inflation. So that's the limit there. Okay. I look like a vampire. I know, man. I'm sorry. So Sebastian will most likely be here next week to fix the lighting. It's probably better with just if I turn that darn thing off. Okay, get 2 questions. Why don't you use Patreon? Have you ever thought of living in Ecuador? I lived in Ecuador, David. I believe it or not. I've lived all over the place, as you can tell. I've been to over 40 countries, but I have lived in Ecuador. In fact, I own property in Ecuador. So I don't know if you got a specific question regarding Ecuador, how it is to live there. I'm very familiar with the coast, with Quito, with Cuenca, Guayaquil, Baños, all those places. Why don't you use Patreon? We probably will in the future. It's just before I use Patreon, I want to have something to give people. I just, just the recurring donation thing is cool, but I just want there to be some additional value. And honestly, I just haven't had time to create that additional value, because I've got, I don't know if you know this, David, but I've got real estate projects that I have ongoing. I don't put a lot of time into them because I have people manage them for me, but I've got a couple really, really big projects going on right here in Medellin right now. So we're in the stage of the remodels where, I've got to go over there and check on them. We got to pick out paint, we got to pick out tile, we got to pick out finishes, we got to do that. And I do like to be hands-on in that process. So anyway, as soon as I get some time, we'll make it happen. See, question, do you think, so Alexander asks, do you think unemployment will start to pick up in the United States soon? Yes, I do, because the unemployment rate's always a lagging indicator. So if you've noticed in the past, whenever we've got to that bottom line or to the lowest unemployment, there's only one way to go, and that's up. Okay, Nathan asks, hi George, I'm looking to purchase a condo in Vegas. Okay, cool. I lived in Vegas too. Let's see. My debt to income is less than 11%. What would you do? Nathan, it's super hard for me to answer specific types of questions like that, because I get it, what your debt to income is, but there's so many other variables. Now, that said, I was just talking to my mom about this the other day, because she's a realtor in Vegas. And the thing with Vegas is that the property prices there, if you look at the price to income, they're not ridiculous. I mean, they're not like Los Angeles. So, but they're not as good as the Midwest. So it's not the worst place where you could buy, but it's not the best either. I mean, I personally, what I would do if I had that VA loan is I'd go buy a rental property in the Midwest where the price to income ratios are more reasonable and your RV ratios are higher. So the amount of rent you're getting in that area per $100,000 spent is much higher than in Las Vegas. And then I would take my equity, I would move it to Kansas City, or a place where the equity was safer, meaning there was less downside risk. And then obviously you have to get a great property manager, which I'm happy to refer you to if you want to check out the Kansas City market. And then I'd probably rent in Vegas, because when the RV ratios are lower, it's generally a better deal to rent. And when the RV ratios are higher, that's where it's generally a better idea to buy. So I know that doesn't answer your question directly, Nathan, but that's the best I can answer it, not knowing your specific situation. Another thing I would say, and just remind everyone, is that the only thing that's cheap right now in the United States is 30-year fixed rate debt. And I don't mean bonds. I mean mortgages. So I think it's a good time to own 30-year fixed rate debt, as long as the asset that you're purchasing or the property that you're purchasing is done wisely in the right area. And going out to Seattle and buying a condo there, that's not the right way to use 30-year fixed rate debt. Again, going back to the single family home in Kansas City is the way to go. All right. Okay, question. I think it's Uriah. Sorry if I got your name wrong, Uriah. Question, would a dollar collapse cause a rise in the stock market? It very well could. It very well could, but that doesn't mean that the stock market would go up in real terms. And a lot of people, the inflation thing, it's really tough to kind of get your mind around. But so whenever something's hard for me to get my mind around, I always like to take it to extremes. So let's just look at the Venezuelan stock market, okay? I haven't checked on it in a year or two, but it was going to the moon because it's denominated in their local currency. Of course, when you have hyperinflation, that's going to, in nominal terms, the stock market's going to explode. But that doesn't mean that it's going up in real terms, meaning that your purchasing power is actually going down, even though the price of the stock market is going up. So in American terms, the S&P 500 could double, but you could actually lose purchasing power. So that's why you really got to think twice about shorting the market. Okay. Okay, so Vince, excuse me guys, here's my water. Okay, Vince asks, can you touch on putting money into a high yield savings account such as Capital One? You got to remember, Vince, that, and I don't know with that specific savings account that you're referring to, but it could be going into the repo market. It could be being lent into the repo market. That's how you're getting the high yield. So, boy. If it were me personally, I wouldn't want my money there because I don't know if they're putting that money in the repo market. Now, that said, this specific account that you're referring to, they might not be doing that. But I wouldn't take the risk. For what? For what? You know, 30 basis points or whatever it is. I personally, I wouldn't do it. Let's see here. Oh, we've got a couple super chats. Oh, shoot. Sorry, guys. I haven't. Let me go back up to where I was. And okay. And let me go back to Sebastian here. Okay, first super chat from Gerald. Gerald, thank you very much, buddy. I really appreciate it. Question, I'm in my late 40s. Cool. Is it worthwhile to continue 401k contributions knowing home market is a scam? Well, again, it depends. If your 401k is comprised of stocks, I wouldn't be comfortable with that, or stocks and bonds. And so I'm going to circle back to what I told the other individual, that if you can get that money, and I don't know if you can do this without having a tax event, but if you could take that, sell the stocks, and then purchase cash flowing real estate, good in a good neighborhood. Let me be clear about that. In the Midwest, where the RV ratios are high, in a good neighborhood. I'm not talking about going into the ghetto and trying to be a slumlord just so you can get a 12% yield. That's not what I'm talking about. I'm talking about going to a really, really, really good area, great schools where everyone wants to be, and getting just a nice 3-bedroom, 2-bath house you can get for probably 130, 140 grand. That thing will rent for 1,300, 1,400 a month. You'll have a 1% RV ratio, and just get a turnkey property. There's a lot of really good turnkey property guys out there. The best that I know of is a guy by the name of Jason Hartman, who is, I'm not sure, I'm assuming his website is jasonhartman.com, but he's got a great podcast called The Creating Wealth Show with Jason Hartman. And that's what he does. He is a pro. So if you're new to real estate and you just wanted something turnkey, which is what I would suggest if you didn't really know a lot about it, that would be the direction I'd go. So hopefully that answers your question. It's just taking the equity that you have in your 401k or the purchasing power and just moving it into an asset that has much, much less downside, but also gives you a really good yield. Okay, Baruch, hey, thank you. Shoot, no, I lost. Okay. Baruch is here again. Thank you for your continued support. I really appreciate it. Colombia is known for emeralds. I didn't know that. Are you buying any? No, I'm not. I did not know that Colombia. Oh, yeah, actually, yes, I had heard that. But no, I'm not buying any. And then thank you very much for your support, Baruch. I really appreciate that. And Joseph, have you heard of a, Sebastian keeps texting me here. All right, Joseph, have you heard of a gold-backed ecosystem Karatbars has built? I'm not sure if I'm pronouncing that right. Gold embedded notes, gold-backed crypto, gold payment systems, and gold bullion in small increments for savings. Look into it. That sounds really cool. Wow, that's really neat, Joseph. I'll definitely look into that. And one thing that I'm planning on doing, not for Joseph and for everyone for the channel, is really taking into a deep dive myself into how to buy gold, how to buy physical, going into the miners if you want to speculate. I'm going to do that for myself, and I'm gonna buy whatever I think is best with my own money, and I'm going to take you guys through that entire process and kind of think out loud with a few videos. So if you guys want to buy precious metals or maybe something like this, I think Gold Money does the same type of thing, that you guys can do that as well. And I'll just download all the information that I find to you guys, the good, the bad, the ugly. Okay, next is David. Thank you, David. I appreciate it. David sent a sticker, really cool. Okay, so I guess with the sticker, there's not a question. So thank you, David. We'll move on to Noah. Can you talk about the VIX and why the volatility is so low? Yeah, because everyone's going long. Everyone's short. Sorry. Everyone's short the VIX. So, I mean, the VIX is the ultimate way to pick up pennies in front of a steamroller right now. So I would not be short volatility. I just think that's a fool's game. But it's tough to be long volatility as well, especially with the Fed coming in. And if they get any volatility in the market, other than to the upside, they're going to try to squash that. So I wouldn't mess around with the VIX right now. But the reason it's so low is because there's a lot of people shorting it. There's a lot of liquidity. There's a lot of liquidity going into that bet. Just like the S&P, same thing. Why is the S&P at all-time highs? It's not necessarily because of the fundamentals. In fact, it's not because of the fundamentals. It's just because there's so much liquidity going into it. Okay, Colin asks, big fan of yours. Thank you, Colin. I appreciate it. Thank you for the support. I've watched all your videos. I hope not. Some of those early videos are pretty bad. I hope not. Okay, I invest in precious metals stocks and own a home that is almost paid for. Good for you, buddy. Good for you. I'm 31, no kids, looking to move out of California. I don't blame you. Go to a conservative state. What would you do? I would go Well, I like Vegas. That's where I've lived before, and a lot of my family lives. But any place in Nevada is great if you didn't want to move that far from California, where you're still just a really nice drive or an easy drive. Reno, a lot of people are going there. Reno's really picking up as far as its tech scene because of so many people leaving Silicon Valley, and just, they want to be within a short drive. So that's probably where I'd look, assuming that you have ties to California. Texas is great. My sister lives in Texas. I love Florida because once you go down into Miami, then you've got so many different options for investing and going places quick, such as South America. Where I am right now in Medellin is only about a 3.5-hour flight direct from Miami. So that gives you a lot of different options, especially a young guy like yourself with no kids or no ties. I would want to do some traveling. I would want to set up a bank account outside the United States. I would want to get a second passport. And being in Miami, it's perfect for that. So I guess the short answer is, if you don't have any ties to California, I'd go to Miami. If you did have ties to California, I'd go to Nevada, probably Vegas, because Vegas is a really good hub where they've got a lot of direct flights to Panama City and to South America as well, to a lot of different places right there in McCarran. So one of those two places, depending on your specific situation. Okay, Stephen. Thank you, Stephen. Says, great job. I appreciate it. Okay. Okay, Expression Beats says, okay, yeah, I guess we got some trolls on the comment thing. Sorry about that, guys. I appreciate your suggestion, Expression Beats. And Sebastian texts that to me. So Sebastian knows what's going on. So when he gets into the office first thing in the morning, I'm gonna have him look on how to fix that so we don't have that next week. Okay, and I think that's it right now for the super chat. So let me go back to the other questions. Got Fed, okay. Employment. Okay, you got that. IC asks, what's your future outlook on Deutsche? Not good, that's for sure. But let me say something. I did a lot of research over the weekend on the 2008 crisis and what happened with the banks. And there were a couple banks in Europe that did some really shady things, but they almost bailed themselves out of their financial problems. So I think that if it were just all left to fundamentals, Deutsche's, I don't see them having a real bright future. They could be in the process of going bust as we speak and getting bailed out. But they're so systemically important that if the government's going to come in and bail out our banks, AIG as an example, the ECB is definitely going to bail out Deutsche. They can't let that go under. Well, they can. I think that would be great. That's what they should do. But I don't think they will. And maybe that's what the Fed's helping them out with now in the repo market. Oh, the Observer, I think I missed your question there. Sorry about that. Why do you feel deflation before inflation? Well, that's a tough one to predict. I'm saying it could happen. I'm not saying it will happen. It could happen because we've got so much debt in the system that debt wants to deflate. So you can have a debt deflation and still have inflation. It gets pretty complex because there's so many different currents. As an example, in 2008 and 9, obviously we had a debt deflation, but we had we didn't have price deflation. Prices, CPI, for what that's worth, still went up. So you can have a debt deflation and still have price inflation. And then, but why should there be a deflation? Because the system has so much debt that should, once that debt leaves the system, once it's paid off, that reduces the money supply. When the money supply is reduced, there's less dollars going around in the system, and the velocity would probably be much lower. That would lower prices. So I don't think the Fed would allow that, because the US government is the biggest debtor of all time. And if we do actually have price deflation, then that would mean the debt that the US has would become harder to handle. The debt would basically go up in value. So I think that's when they come in and just throw everything they can against the wall, and that's what creates the inflation. That's definitely a probable scenario. But I'm not saying that there will be deflation, but I'm saying that there could be. So I want to be specific there. Okay, I got there. Thoughts on crude, gas, in the Middle East tension? That's a question from Alexander. So let's see, Alexander. Whenever someone asks me about the price of something, I always say, in what time frame? So thoughts on oil prices in the next month or in the next 5 years? Short term, I don't know. I have no clue, because I'm definitely not an oil expert. But I know from all of the content and all the research that I do from really, really smart guys in that space, the 10-year horizon for oil is up. It has to be, because one of the reasons is because fracking can only do so much, and that depletes reserves extremely fast. So at a certain point, you're back to, we don't have limitless oil. So long term, I think prices have got to rise, but what they do in the next 3 months or the next year, that I don't know. I do know that all commodities right now are cheap, relatively speaking. Commodities are really, really cheap right now, and they're cyclical. So that's on crude, okay. All right, so just, okay, so Mr. Fatface asks, if we go into hyperinflation, that should be great for my mortgage, right? It sure will be, Mr. Fatface. That will be awesome for your mortgage, assuming that you've got a fixed rate loan. And so where we have to go for you to make money, or for there to be a transfer of wealth from the bank, it's not really the banks, they're not holding the paper, but from whomever has the paper to you, the rate of inflation would have to exceed the level of interest you have. So let's say you've got a 4% fixed rate 30. Well, if inflation gets up to 5, 6, 7%, that is a transfer of wealth from the creditor to you. So if we get 70s style inflation, you're going to be doing really, really well, because you're going to be paying that loan back with much, much cheaper dollars. Ken asks, do you think the S&P can hit another PE of 40? It absolutely can. It absolutely can. And he points out all these stock buybacks are going to be running out at one point. They will, but when? And if you look at how the Fed prints money and how they do QE, that money stays into the it's meant really to stay in the financial system and to go into risk assets. So as most of us know, the fundamentals do not justify the stock market being where it is right now. Not even close. not even close. So the reason it is because of excess liquidity. And that excess liquidity, unless we get inflation, has no limit. So yeah, I definitely think it could go to 40. I wouldn't buy it, not even close, because as most of you know, my philosophy is you've got to buy things when they're cheap. If they're not cheap, you don't buy it. And there's nothing cheap about the S&P right now. Sandro asks, what are 3 great books? Number 1, Basic Economics by Thomas Sowell. It's a must read, not just for investing, but just to get your mind right on how to think about things. You've got to read Basic Economics, Thomas Sowell. Number 2 would be all the Market Wizards books. And if you're not familiar with the Market Wizards books, that's Jack Schwager interviewing guys like Jim Rogers. And Jack's a smart guy, and he knows the right questions to ask. And Rogers, Druckenmiller, all the greats, even Ray Dalio. And I think there's 3 versions of it there, or he did it 3 times. So that would be number 2. Number 3, let's see, probably The Intelligent Investor, just because it gives you a good framework for how to think about value. But no. Now, let me give you 4. So that book by Ben Graham, and then Jim Rogers. Read some of his books. That's what I'd say. For sure, Jim Rogers. That's really going to tell you how to think about things. And then I'd also add, it's not a book, but I'd listen to the Macro Voices podcast, and I'd check out Real Vision. All their videos, they have free videos on YouTube that are just fantastic. Okay, so Nick asks pretty much a similar type question. Just name books that'll help a person understand the economic principles at play in your videos. I don't know if I'd look at books, but any books by Rogers, Jim Rickards. If you can read Mark Faber, that would be good. Peter Schiff, a lot of people give him hard times about his predictions, but if you look at the way he analyzes the economy, that's really good. That's where I'd start. I mean, I just look at YouTube videos of Rickards and interviews. Go back as far as you can with Jim Rogers. Jim Grant is another one. I just try to absorb as much content as I could, and you'll start to understand their framework and really help you see things in a different way, the right way. Jeff asks, if you had to buy stock, which stock would you buy? I would, if Sprott pays a dividend, I'd probably go that direction. That's probably what I'd buy. Okay, we got another super chat here. All right, Nick. Thank you, Nick asks, any reading material? Okay, whoops, I think that, Nick, okay, that asked the same question. So hopefully that answered your question, Nick. But as far as reading materials to understand my framework, the books that I suggested to Sandro, they would be applicable as well. Okay. Rich asks, are you a U.S. citizen? If so or not, What influenced your decision? I'm still a U.S. citizen. I'm in the process of getting my passport in Colombia, so I'll have dual citizenship. And so it just gives you options, and options are good. What's the downside of having a second passport? There is none. So if I were to see, and you know what's interesting about that as well, that most people don't understand, is the United States has an investment visa. So, I mean, it's higher than most investment visas. It's probably around $1 million. But if you had the means to do it, you could renounce your citizenship and just buy an investment visa. And then you're not subject to all the nonsense, and you can still go back to the States whenever you want. So I haven't done that yet. We'll see what happens in the future, but I've got to wait until I get the passport from Colombia anyway. Okay, let me make sure I'm caught up with Sebastian on the super chat. Yep, okay, good. Fred asked, George, why the Midwest? Because the RV ratios are really good, Fred. The downside is a lot less because the price to income ratios are a lot better. And if you look at the prices, historic prices, adjusted for inflation, they're a lot closer to their historic trend line than other places, like the West Coast, like Seattle, Portland, LA, San Francisco, etc. Mark asks, buying into a Roth IRA after the crash. After the crash? Sure. I mean, yeah, listen, I'm not here to just nonstop bash on the US, the stock market, the housing market. I do it right now because it's in a bubble. It's ridiculous. So, but listen, I went all in with real estate in 2012 in the United States, almost all in. So at a certain point, if it's cheap, yeah, you absolutely want to buy it. Absolutely want to buy it. So if the stock market gets cut in half, it goes back down to 10,000, there's going to be some stocks that are really, really cheap, a nice sweet dividend, and you can go up there and just scoop them up. Okay, Braun asks, oh, no, we just got a super chat here. So Jason, thank you very much, Jason, asks, I'm teaching a bunch of CPA. Oh, that's got to be fun. I apologize, Jason. Accountants and lawyers are not my favorite group of people to have to hang out with, unfortunately. But okay, I'm teaching a bunch of CPAs a course on macro trends. Any tips? I'm not sure the level of sophistication these CPAs have. If they're like most CPAs, that would be 0. So I would start with the basics. That being, I'm trying to think this through in real time here. I would probably go over sovereign debt first. I would help them understand the US sovereign debt problem and how that might lead to inflation, and how assets are overpriced. I'd use housing chart. I'd use that housing chart as an example, going back to 1890, the one adjusted for inflation. So you can see the delta between the historic trend line and where we are now and where we were in 2008. I'd start there, I think. And then what I would do is I would go through my videos and just kind of pick out the ones that you think outline a specific topic well, and just try to take that information and just package it in a way that they'll understand. That would be my best advice. Okay. Now Sebastian's telling me I missed Colin. No, I got Colin, Sebastian. Sebastian's not here, but he's watching the live stream from out of town. Yeah, I got to Colin. Yeah, and I think I've got all of them, Sebastian. Except we got Johnny here, so that's the one I have not got to yet. And if by chance, if I missed your question, guys, and Sebastian points it out to me, I apologize, but I'll figure out some way to answer it via email or directly to you. I don't know if the emails come up, or yeah, your YouTube account does. So hopefully there's a way that I can message you directly, but I'll figure that out if I accidentally miss your question. On the super chats. Okay, nice. You're recommending books I've read. Okay, cool. What do you think of Panama to retire? Alternative compared to Colombia? I don't know why you go to Panama. Panama is great because of the airport, because you can get direct flights everywhere, but it's okay. It's just not great, especially when you're only an hour or hour and a half away from Medellin. I mean, forget it. Medellin is on a whole different level, and a whole different level than Panama. So, and not only that, but Panama's on the dollar. And if you're retiring, or they got a fixed rate for the dollar. So if you're comparing that, and especially if you're about ready to retire and you're on fixed income and your retirement is coming in dollars, why wouldn't you go to some place where the currency was super cheap relative to the dollar? Because you're increasing your purchasing power. You're not increasing your purchasing power much by going to Panama, but you'd be tripling your purchasing power by coming to Colombia. And Colombia's a hell of a lot nicer too. So not that I don't like Panama. It's just no Colombia. Okay, Baruch again asks, thank you, Baruch. What state is the best to buy property in the middle? I like Missouri. That's where I bought all my properties. And specifically in Missouri, I like, Kansas City is just split right down the middle. So half of it's on the Kansas side, half of it's Missouri side. If you go to the Missouri side, which is on the east, there's suburbs, Blue Springs, that's probably my favorite, Lee's Summit, and Independence. Now, Independence, there's only parts of it that I like because parts of it are pretty ghetto. But there are sections that are really, really good with great schools where everyone wants their kids to be in that school. So if they're right around I could say areas, there's a golf course called the Drum Farm Golf Course. And right around that area, between Drum Farm and the highway, there's some pockets of really good areas. But mostly you want to stick with Blue Springs and Lee Summit. There's almost nowhere you can buy in those areas that isn't just a really great neighborhood, solid suburbs with little 3-bedroom, 2-bath homes, right around that 130, 140, maybe 150 price point. And now I want to also say, if you guys decide to go through a turnkey provider, make sure you email me first. And my email's on, or just direct message me on Twitter. That's probably the best way, is direct message me on Twitter. And I'll tell you what to look out for, because some of the turnkey providers, they just sell garbage that they can't sell on the open market. So they know they can sell it. They can't sell it at as much of a premium as they can to out of town folks who don't know the area. So you want to be careful with those turnkey providers. If you're thinking about doing that, direct message me on Twitter and I'll walk you through it. Okay, Conrad asks, do you see a need for a bank that is gold backed? Yeah, I think the currency should be gold backed. I mean, yeah, for sure. I think if the currency is backed by gold, then that pretty much solves the problem right there. But yes, I absolutely do. Okay, I think we got caught up on the super chats. Cool. Let's go back over here. Okay, Braun asks, if we go to negative rates, what do you do with cash, your emergency money? Well, That's why I suggest having some gold, physical, first and foremost. What would I do with my cash? I mean, unfortunately, I'd leave as little cash as I could in the bank, and I'd take that cash out and put it into an asset that's going to go up with inflation. So if at all possible, I'd take that money, go into rental properties, something that's going to be a hedge against inflation. I like the rental property because it pays you to own it. I think the combination of that and gold is fantastic, because gold gives you that just 5,000 year history, the insurance policy, so you're always going to have purchasing power. It's never going to go to zero, ever. It's most likely going to maintain, if not gain or grow its purchasing power, but it doesn't pay you to own it. And I like getting paid to own things. So I like a combination of both those things. But then you got to leave a little in the bank. Another thing, I'm thinking out loud here, I might go into short-term treasuries, like 3 month, and just roll them over, because those might go negative. Well, if they weren't negative, if I would try that. I would try, and I just saw that I'm gonna be doing a video on it, but I think Germany now has actual negative interest rates on deposit accounts, on customers' deposit accounts. So it's not tinfoil hat stuff, that's for sure. But if I was getting a better rate on like a 3 month or 6 month treasury, I'd do that and then just roll them over until inflation gets hot, and then you got your gold to hedge. I'd probably do some combination of that. Laurent asks, if a recession hit, what's your take on putting 100% of my capital in bonds and gold? No. Investment grade bonds. Oh, no. No, bonds interest rates are at 5,000 year lows, which means that bonds are at 5,000 year highs. That is not cheap. So I don't like bonds. After I just told you to go into short-term bonds and roll them over, but they're short-term. They're short-term. So even if you hold them until they expire for the 3 months and get your cash, you don't have much risk there. With bonds, you buy a 10-year note and you got to hang on to it, and we get inflation, or interest rates go up, normalize 5-6%. Geez, you got problems. And having 100% of your assets in gold, I don't like that either. I know a lot of people do, and I love gold. I think it's fantastic, but not 100%. Just because, let's say that we get hyperinflation in 10 years. When it hits, you're going to do really, really well with gold. But you've got 10 years to wait, when you could have some of that money in an asset that's paying you to own it, and you're accumulating all of that money and maybe reinvesting it into other hard assets. So in that 10-year time frame, you've been able to grow the amount of hard assets that you have with that cash flow. Where if you would have been entirely in gold, you wouldn't have had that opportunity. So I think there's an opportunity cost there in gold, because there's no cash flow. Okay, we got to that. Couch potatoes, thanks a lot, buddy. I really appreciate all the comments on the channel. I always see them. I always try to do my best to respond to your comments on the videos, because you're just always there. I really appreciate the support. Do you think negative rates are coming? And if so, what would be the repercussions? The exact repercussions, nobody knows, because there's so many moving parts. It's like predicting the weather. It's just, there's so many variables that it's impossible for the human mind to just conceptualize and really understand all of them and how they would play out. I can tell you that most likely assets would continue to go up, the wealth gap would increase, and it would create massive distortions because there would be no price signals. And if you watch my video on that, you can see, hopefully I explained well, how resources get allocated well when there's a price, because there's a lot of information in a price. And an interest rate is the price of money, and money is 1/2 of every single transaction. So when you start effing with the interest rate, you're effing with the price of everything. So like Jim Grant says, you're basically living in a hall of mirrors. You don't know what's real. Nothing is real. There's no price that's real right now because we have these artificial interest rates. That times 1,000 if interest rates are actually negative. So it doesn't end well. I mean, just think about that. If you were to ask anybody, even Krugman 20 years ago, or 15 years ago, what would happen if we had negative interest rates? Number one, they would say it's impossible. They would say it's impossible. Number two, they would say we would be living in caves and eating canned goods. Even Krugman would have said that. So negative interest rates don't end well. That's the bottom line. Okay, we've got another super chat here from Jeff. Thank you, Jeff. Thank you for your work. Keep it up. Continue to provide value. I will, Jeff. I absolutely will. I really enjoy the channel. I enjoy doing the videos. It's a lot of fun. I enjoy interacting with everyone, and I'm definitely gonna. As long as you guys keep watching them, I'm gonna keep doing them. let's just put it that way. And also that reminds me that I'm gonna be on. I did a podcast. This YouTube channel has blown up so fast. I'm getting a lot of requests to actually do interviews and things of that nature. And I did a really cool, fun podcast last week. It comes out tomorrow, so you guys check that out if you can. It was on the Financial Survival Network. So if you go to financialsurvivalnetwork.com, the guy's name is Kerry Lutz. Really, really good guy. And according to Kerry, prior to Thanksgiving, his producer, it's supposed to come out tomorrow. So you guys can check that out. All right, going back to the questions. Juan asks, what's your take on Tesla as a company? Also holding their stock for the long run. Is holding what considered the new gold consumer data. I think there's an argument for that. I wouldn't call it the new gold, but I think there's a great argument that consumer data is where it's at. That's for sure. Do I like Tesla? No, not even in the slightest. I think the cars are awesome. I think the cars are really cool. But as far as Tesla, the company, they incinerate money. They made money last quarter, but it got a lot of financial engineering there to make that money, and they've never made money over an entire year. And so I hope they make it. I mean, I think it'd be great if Tesla makes it, but their stock price is just way overvalued. And plus, just my personal investment strategy, I like to buy things when they're cheap, sell them when they're expensive. And there is nothing cheap about Tesla. So I would not buy that. But that doesn't mean the cars aren't great. And I think the cars are fantastic. So a lot of times, you're kind of one or the other. You either love the stock and love the cars, or you you hate the stock and hate the cars and hate Musk and think he's, he should be in jail and all these things. I think those are interesting arguments, but for me, I just don't like the stock, but I love the cars. So. Okay, Sebastian's telling me I'm at 55 minutes. Okay, cool. Greg asks, thank you, Greg, for the super chat. Why not 100% gold and scoop up assets with gold? Okay, so I went over that, Greg. Hopefully you heard that. If not, I'll just reiterate quickly here. And I'll keep this up, guys. This one will stay live to the public. So if you want the longer explanation, Greg, when this goes live, you can just play it again. But why not? Because there's opportunity costs if you're owning an asset that doesn't pay you to own it. So if we didn't have hyperinflation, or if things crash in 10 years or in 5 years, you could have been collecting cash flow with real estate, as an example, and then taken that cash flow and purchased more gold or purchased another hard asset that's going to pay you to own it. So there's an opportunity cost there. That's not to say that you don't want to own gold. You absolutely do. But you just, in my opinion, you don't want to own 100% of anything for that matter. You remember the third rule of my investment strategy is to diversify. So diversify your portfolio, diversify your political risk, and diversify your currency risk. Okay, we've got another super chat. J.A. Thank you, my friend. Asks, what is your opinion of Bitcoin? I think I like Bitcoin. From a philosophical standpoint, I am all about it. I mean, I love it. But I don't think that it is digital gold. Not yet. I think it can be potentially in the future, but not yet. It's just the price swings are too volatile, and it's only had 10 years of history. You need an electrical outlet to access it. So as Jim Grant says, I don't like my store of value to require a light socket. I think he puts it best, as he always does. But as far as a speculation, I think it's fantastic. I really do. And I don't like to allocate much of my portfolio, if anything, to speculation. But if I do allocate a small portion of it to that, I think Bitcoin would be great. I also think that the juniors would be great as well, the miners. So I don't think it's an insurance policy. I think it's a great speculation. Okay, I'm sorry, Philip asks a question. Does silver have bigger upshot than gold? Potentially. I mean, that differential is skewed, as you know, Philip. But I think silver could have a little more downside as well. I think it's pretty fairly priced right now, in my opinion. But I think owning silver and gold, I don't see why you don't own both of them. I mean, I don't think there's a ton of downside in silver. But the only thing about silver, though, is since it's more of an industrial metal, it's more tied to the market, and the market being at all-time highs and obviously in a bubble. If I had to choose one or the other, I'd choose gold. But I think silver would be, again, like Bitcoin. I think silver right now is a better speculation, but gold's better insurance. MH asks, I'll get to that in a second. MH, we got a super chat from El Sois, or El Sols. Thank you very much. Make a video explaining the difference between money and currency. Yeah, absolutely I will. Money is a store of value. Gold is money. It's just, in my opinion, that's really the only money. Gold and silver. It's the only thing that would qualify. And I think Mike Maloney, if you watch his series on YouTube, he can probably explain it a lot better than I can. I would strongly suggest starting there. Currency is just, it's just a way to transact. It doesn't have any value. It's nothing. It's just paper. As an example that I always show the Colombian currency. So like I'm gonna go grab dinner after this. I'll probably spend 50,000 Colombian pesos on dinner. 50,000, right? That's 12 bucks, 13 bucks. So that just goes to show you that what it's just a number. It doesn't mean anything. Yeah, down here, I'm literally a billionaire in pesos. So what? It doesn't mean anything. So it's just, that's the difference between gold and money. Money is just something to transact with, just to smooth transactions. The number on the money is almost pointless. Gold is real money. Okay, going back here, MH, is money market safe for 401k? No. Because, okay, why? Repo, where the reason you're getting a little bit higher return on money market is because they're taking your money and they're lending it into the repo market most of the time. I'm not going to say 100% of the time because I don't know if they do that with 100% of the money, but the money market accounts and the money market funds are big players in the repo market. That's how they get that additional interest rate or that additional yield. So if you've watched any of my videos on the repo market, if you haven't, do it right now. But that's not where I want my money. I don't want, let me put it to you this way. Would you want your 401k, the money in your 401k, going to Deutsche Bank right now? That's what it boils down to. If the answer is not just no, but hell no, then you don't want your 401k in a money market. Okay, TCMFSB asks, how long before cashless? I don't know a specific date. What I can say is I would be surprised if we weren't cashless in 10 years. I think that's my best answer. Mike Maloney says deflation will happen. Diego asks, Mike Maloney says deflation will happen before hyperinflation. What do you think? It very well could, because as I know he's got a video on that, Diego, and I need to watch his video because I like Mike's stuff. I think he's a smart guy, but I need to see what his argument is, and I'm sure it makes sense. But to answer your question thoroughly, I would need to do that, and I'm going to try to get to that this week. But to answer, what do I think? It's definitely possible, for sure. Baxter asks, do you have any thoughts on Kyle Bass, China, Hong Kong positions? So Kyle Bass is probably around 1,000 times smarter than I'll ever be. So I would not bet against Kyle Bass. But that said, I don't know what his specific positions are, other than he's very short. Meaning that he's down on. He's not a big China bull, that's for sure. He's bearish. Long term, I like China, meaning 10, 20 years from now. What happens in the short term? I think Kyle's got a much better read on that than I ever will. So I would definitely consider what Kyle's saying about China in the short term, and I would take it very seriously. knowing that 20 years from now, I think Jim Rogers is definitely going to be right, and that China is going to be the #1 player as far as the worldwide economy. Wealthy Trends LLC asks, would you put a percentage of your portfolio into gold and silver? And when would you do so? Yes, and right now. Because it's just an insurance policy. So it's like asking me, when would you buy insurance on that brand new Porsche that you just bought? Right now, right now. I wouldn't go all in. You might want to stagger your bet though. But I think everyone's got to have a core position in gold. 5% of your portfolio, maybe 10%, but you just got to always have that and just never sell it. It's just always there. So I would do it right now. Maybe you want to buy 5. If you're going to do, let's say 10% of your portfolio, maybe you do half now just to get that position. And then maybe you kind of stagger in on dips, something like that. It's kind of like a dollar cost average thing, but I would have a core position now. Okay. Jeff asks, sorry, Jeff, I can't answer that one. Hario asks, have you been to Panama? I definitely have, several times. Okay, we've got Patriot asks, thank you, Patriot, for the super chat. Really appreciate it. Gold is primary wealth, land, collectibles, business, rental properties, etc., all qualify. It is things you are almost sure will be worth something to others in the future. Any plans for a family? Any plans for my family? I'm not totally sure what you're asking there, Patriot. I apologize, but you're right on the money. And she brings up a great point that if you want to know how to prepare for a crash or how to prepare for the U.S. economy imploding, and I'm not saying that it's going to implode tomorrow or even 5 years from now. I don't know that it'll ever completely implode. I think we'll go through another massive financial crisis that will be worse than 2009. But it doesn't mean that we're all living in caves. But if it were to get, if your question is how do I hedge my bets against a Venezuela type situation, or even like an Argentina type situation, then you've got to just look at what they've done. And so I'd look at history. So what did people do in Zimbabwe to maintain their wealth? What did they do in Weimar Germany? What did they do in Venezuela? What have they done in Argentina? Because what's great about that is that there's been so many countries who have inflated away their currency and where their economies have collapsed, but people have survived and their wealth has survived. So you just have to go back and look at history and ask yourself, okay, what did these people do? And then that's your answer. That's your game plan. That's the map that you need for the future of the United States if you think that we're going to run into an Argentina type situation or potentially even worse. So what is that? That's real estate, gold, collectibles. Okay, going back. Cody, yes. Would you cage fight Jerome Powell to end the Fed? Yes, absolutely. I think he's playing off. Someone asked me that question in the first live stream we did. So, yes, I would, and I would love every minute of it. But let me be clear. I don't think that Jerome Powell is a bad guy. I just think that he's in an impossible situation. And I think that these Fed chairs, they have all these aspirations. And then once they actually get to the Fed, or once they are the head of the Fed, once they're the Fed chair, then I think they get some information that they didn't have prior. And they have, for lack of a better word, they have an oh shit moment where they're like, oh, whoa, I did not know this was going on. And they're just, what do you do? Like if you were the Fed chair right now, like what would you do? Would you collapse the economy? Or would you try to, or would you try to have a soft landing? Or would you try to create Japan? I mean, they're in a real bind. Now, I don't think they've made good decisions in the past, and that's what's got it. They're at fault. I don't want to take the fault off the Fed, but Jerome Powell specifically in a tough position, really tough. Okay, let's try to find another question here. Carl asks, what will happen if we have a bond bubble? It's ugly, Carl. I mean, we have a bond bubble, but you mean if the bond bubble bursts? It's really ugly because all the pension funds are so committed to the corporate debt market, and the corporate debt market is just teetering on the edge of junk. And all the pension funds have gone into so many risk assets. It's the great financial crisis, but way worse. And so, unfortunately. Okay, Johnny asked, Panama retirement, alternate country to live. Again, Johnny, go to Colombia. Go to Colombia. At least go to Colombia before you make your decision. I would go to Colombia, and if you like Europe, go to Croatia and Montenegro. Check out those places before you make your decision. Okay, Baruch asks another question. What are your views on equities in Russia like Gazprom and the mines? I don't know a lot about them, but I know Gazprom has a great yield. At least they did. I looked at it about 3 years ago on the advice of Jim Grant. And not that I know him personally, but I saw a video where he was, or one of his letters where he was recommending that. So I looked it up, had a really fantastic yield. And I like Russia. I think Russia's great long term, but I don't have a real good opinion on that. I apologize. Okay, kind of look at that. Inflation blockade. Okay. Sinshin, I'm not sure if I'm pronouncing that right. Sinshin, I apologize if I'm not. Asks, question, I saw that you invest a lot in Colombia. What do you think happens in emerging markets when the liquidity crisis hits the surface in the United States? Their currency falls with it or rises above it? It really depends on what happens and how the US and the Fed attack a liquidity crisis. And to expand on that, I want to be clear that when I invest in Colombia, I'm not buying their bonds. I'm not buying the currency. In a way, it's a play on the currency because the currency is cheap, but I'm buying real estate. So real estate will most likely go up up with inflation in Colombia. So even if the Colombian peso depreciates against the dollar, you're not going to lose much purchasing power if your pesos are in a hard asset like real estate. So I don't want people to think that, oh, Colombia is great, come down here and just buy pesos or buy Colombian bonds because they're denominated in pesos because the peso is cheap. No. Again, it's all about hard assets. Okay, Iskandar asks, when did you start the stream? How many minutes ago? I start at 7 p.m. Eastern time. Next week, we might play around with that, do it a little bit different time. It's a little more friendly for the folks in Europe, but that's when we started tonight. But I do plan on doing them every Sunday. Okay, Lou asks, if you could pick 2 countries in Central or South America to live as an expat, where would they be? Number 1, Colombia, hands down. Number 2, if I had to choose in Central America or South America, I might go to Mexico because your purchasing power is going to be really strong there because the Mexican peso is really cheap. I'm just assuming that you have money coming in dollars. That's not a safe assumption, but if you do have dollars, that's what I would probably suggest. And you're closer to the US there. But honestly, I would look to Southeastern Europe before I looked at those places or another country around here. I would look at Croatia and Montenegro, Georgia. I know there's a guy named Andrew Henderson who's got a business called Nomad Capitalist. Real smart guy, young guy, and he's really bullish on those areas. And I've physically been to Croatia and Montenegro. I love spending time there. And I think those are really good places to retire. And again, although Croatia's not on the euro, but Croatia, you can get some purchasing power with the currency. Montenegro, they use euros, so you wouldn't pick up as much purchasing power there, but the cost of living is so darn cheap. Even in euros, you can still expand your lifestyle. Okay, Brendan, thank you very much for the super chat. And Patriot asks another question. Colombia, can you get a concealed carry permit? In Colombia. So Patriot asks, can you get a concealed carry permit? I don't think so. I don't think so. What are the taxes? Pretty much the same as the US. Can a resident get hired for regular jobs? Yes. Can a resident get hired for regular jobs? Yes, you can get a work visa. Vaccines for kids required? I don't have any kids, so I don't know, but I would be shocked if they had anything like, once you get outside the United States, once you get in the emerging market countries like Colombia, they don't have a lot of those. The state doesn't own your kid. You have custody of your kid and you determine what goes into their body. It's not, that's more of from what I've seen, going to 40 different countries, more of a US, Australia, more of the developed economies. I don't think you're going to find that anywhere in South America or any of the more emerging developing world. They just don't have they're just not a nanny state. How long hard to get a permanent resident than a passport? In Colombia, it's super easy. I just did it last week with Sebastian. So it's not hard. It just takes you a couple hours to get it done, depending on what type of visa that you get. I got an investment visa, and I'm not sure what the dollar amount is on that. Maybe it's 25,000 US. And then there's a real estate visa. There's several different visas that you can get, but they're not hard. And then passport, yeah. And then so once you have that visa, then you wait 5 years, and then you can get a passport. So that's my game plan. I think they may backdate that 5 years to when I first brought that money into Colombia. So although I didn't get the visa, I had the money here. I've had the money here since 2015. So hopefully that would be super cool. Then I'd be able to get the passport next year. Okay, going back over here. Okay, the VIX, I already talked about that. Okay, we got that. Dennis asked, when do I sell my stocks before the stock market crash? I'm Gen X, and when do I sell before the 2020 crash? Why is the repo market important for when to sell? I don't think the repo market is important for when to sell. I think the only thing that matters on when you sell and buy, Dennis, is if the asset that you're buying or selling is cheap or expensive. This is the biggest mistake that I see investors make by far, is they start by asking themselves the question, is XYZ going up in price or is it going down in price? Wrong question. Forget that question. That question, forget it. The question you want to start with is the asset cheap or is it expensive? If it's cheap, you buy it. If it's expensive, you sell it. Couch Potatoes asks, do you think we are heading toward Japanification? I think that's the best case scenario long-term for the United States. Do I think it will happen? It could. I don't think that the probability is as high as other outcomes, but I think that we could see that. Peter asks, which country in Europe has the same profile like the Midwest? I'm assuming, Peter, you're talking about real estate as far as the RV ratios. And I don't know all those countries that well. I would refer you to Andrew Henderson. He has the website Nomad Capitalist. He lives in that area, and in a lot of his blog posts, he goes into, and I think he does a lot of YouTube videos as well. He goes into deep dives on real estate in that area, and I would refer you to him because I'm an expert in real estate in the United States and in Colombia and other places where I've invested, but I've tried to invest in Montenegro and Croatia, but I haven't been able to. I've put in a bunch of offers, but I just haven't got any of my offers accepted yet. So, but those other countries in that area, I know have a lot of opportunity and have some great RV ratios, but I don't know what they are because I haven't explored them myself. So again, go check out Andrew Henderson at Nomad Capitalist, a lot of the deep dives that he does. I think you'll find a lot of information there. Okay, question, what do you think about oil? I answered that, Derek, so just if you didn't hear that, go back and rewind that after the live stream is over. Well, this is a good question. Hario asks, how do you know if houses are overpriced in a developing country without much data? Great question. RV ratios, which is cash flow. So if you buy a house for $100,000 or a property, and that gives you $1,000 gross net per month, that is what I would consider a 1% RV ratio. Every single month, you're being paid gross 1% of your cost basis that you have in that property. The higher that number, the higher the percentage, the better it is. So if you can get a 2% RV ratio in a country, that is cheap. That is cheap, because what you're buying, remember, you're not buying the real estate, you're buying the cash flow. So that in a way, I don't want to say that definitively, but in a way, you're buying the cash flow. So you got to start there. That's what I suggest. Joseph asks, "Hi George, what do you think about crypto market? Is it a scam or is it the future?" I mean, I don't think Bitcoin's a scam. As far as some of the other cryptos, they very well could be. And a lot of the ICOs, I'm sure they are. But as far as Bitcoin, I don't think it's a scam. Is it the future? It depends on how you define the future. From a transactional standpoint, like, is it going to be a country's money and how they transact back and forth with billions of transactions on a daily basis like the United States? Not in its current iteration. And I don't even think the real hardcore Bitcoin bulls would say that it is, because it's just too cumbersome. It takes up too much electricity. It's too costly to transact that way. But could it be a future store of value digitally, like a digital gold, if you want to look at that? It very well could be. It very well could be. And there's only 21 million of them. So it's got a defined set amount. And even gold doesn't have that. So I think that it's definitely got it definitely has a future. As far as how bright that future is, I don't know, but I think it's a good speculation. Warren asks, do you think the interest rates will zoom up once the crash is in full swing? It just depends on the inflation rate. If we start getting inflation, or if investors see a lot of money printing and they think that that is going to lead to inflation in the future, then that long end, they're going to lose control of the long end of the curve. It all depends how it plays out. I mean, if you had a deflationary bust, then like the debt just implodes, you could see prices go down and interest rates go to the negative, way negative. That very well could happen. So it's tough to say, is it 50-50, 70-30, but it's definitely possible. It's worth doing a lot of thinking about and positioning yourself that you're going to be okay if that does happen. And how do you do that? That's same thing. It's just really solid hard assets that produce cash flow, diversify, have some gold as an insurance policy, and diversify your currency and political risk. Great. Jade, thank you, Jade, for the super chat. Really appreciate it. I don't see Sebastian didn't text me a question, so I'm not sure you have a question, but thank you for the super chat. Timothy, do you think the upcoming halving in Bitcoin is already priced in, or could we see a large run? I have no idea, Timothy. No idea. I don't know enough about Bitcoin to answer that question. Donald asks, hey, George, how about coming to Denmark to do some house renovations and flipping them? I I like warm weather, Donald. I don't like the cold. I don't like the cold at all. And also in Denmark, I'm not sure that I could get the returns in. I don't talk about it much, but on flips here in Colombia, I can get a 40% return on that. No joke. So annualized 40% return. I don't think I could get that type of return in Denmark because the market is much more efficient than it is in these South American countries and in kind of the non-developed economies. So I don't think I will. It's not that I don't like Denmark. It's just I don't like cold and I like making money. So, Reggie, what are your thoughts on Tesla? I outlined that earlier, Reggie. In case you missed it, just you can repeat the or watch the live stream. I talked about maybe 20 minutes ago or so. Bob asks, how important is the Lebanon situation? Could there be contagion from potential bank failures? That's a great question, Bob. I'm not sure. I am not sure. I don't know if there's any contagion risk there with bank failures, but it's definitely not a good thing for especially because how delicate the worldwide economy is right now. You never know what little catalyst is going to set it off, that butterfly effect. Who knows? Okay, Sebastian's telling me I'm at an hour 30. Okay, we've still got almost 500 people on here, so I'll answer a few more questions, guys, and I've got to go get some dinner. Ah, shoot, I just lost my place. I don't know why it skips like that. Sorry, guys, let me get my place back here. Joe asked, where would you store physical gold? In my pocket. Not literally, but I like keeping it somewhere where I know I can access it. Not all of it. They've got great gold storage in Singapore, in Perth, in Australia, in other places. So you probably want to do the majority there, but I like storing a little bit to where you got access to. Okay, got another super chat from Patriot. Thank you. Please consider a float.app account. There's no sense in delivery-minded super chat without Google taking 30%. Thanks. Yeah, definitely will, Patriot. I appreciate the suggestion. And Sebastian, if you're watching, if you could do me a favor, just put that on your to-do list for tomorrow. Let's check that out. Okay. Dennis asks, how much larger than 23 trillion the U.S. has to get before a stock market crash? I don't know that the amount of debt would be a catalyst to the stock market crashing. Well, actually, I take that back, because if the debt gets high enough, then if interest rates get out of hand, then that's definitely going to crash the market. So there wouldn't be a direct effect, but there would be an indirect effect through the raising of the interest rates. That's what would actually do it. But what that number is, 23 trillion, 40 trillion, 100 trillion, who knows? Like I said last week, and that's famous saying, the market can stay irrational a lot longer than you can stay solvent. Jade sent a "Hey You" sticker. All right, thanks, Jade. Let me take two more questions here. Okay, now I'm getting to the troll thing. Oh, geez, that's too bad. That's ridiculous. Sorry about that, guys. That troll stuff is. Question: X asks, is it possible to buy Colombian property remotely for turnkey managed rental? 100% it is, yes. And a lot of people have this question, and it's great, but a lot of people think that that is a prohibitive factor in them owning real estate outside of the United States or even outside of their local city or state. It's not. It is not. Listen, I've got properties in Kansas City, as you guys know. I haven't seen them in years. They could be painted pink right now. I have no idea. I just get that rent check every single month. Rent checks. They just show up in my bank account. I just hired a great property manager. So it's totally possible to do in almost any country that I know of. You just got to find someone good to manage the property. Once you buy it, you got to buy right. You got to buy cheap. You got to buy in the right area. You got to do all that stuff right. And if you do that right, then it's definitely doable, regardless of where you live or where the property is. Okay, let me do one more question here. It might be. Okay. Okay, so last question here, guys. If it's from Paul. Thanks, Paul, for the question. If you have pounds and you want to purchase a house in USD, would you do it now or wait? That's a great question, Paul. I'm trying to give you as good of an answer. I would probably do it now, because although the dollar is wildly overpriced, because there's so much external dollar-denominated debt outside of the United States that we could see the DXY go to 110, 120, who knows, before they do that faux Plaza Accord that I outlined in one of my last videos. At a certain point, I think they'd have to do that. They can't let it go that high. They mean the US government. It would just crush them and crush too many other economies that have all that USD debt. So I would go ahead and do it now, because timing that is just impossible. It's just impossible. And if you can get some good, solid cash flow right now, then why not? Okay, and I think that's it. So make sure we're caught up on the super chats, which we did. All right, guys, thank you very much. And I just want to remind everyone before I go that if you guys are doing shopping tomorrow, Cyber Monday, if you could do us or the channel a huge favor and use our affiliate link to buy whatever you're buying on Amazon. That would really help support the channel and help me pay people like Sebastian and Stephanie and Thomas and all those amazing people that I have working for me, helping to produce the videos. So all you have to do is just go to the About Us page on the channel, and that the Amazon affiliate link is there. Or if you go to that video that we did on Saturday, you can click on the Amazon link. That takes you directly to Amazon, and then whatever you buy, we get a small commission for that. So if you guys could do that, that would be awesome. Really appreciate it. And I will see you guys on tomorrow's video. I'll let it be a surprise what I'm going to talk about. I'm going to get a little political tomorrow, maybe. I'll just tease it with that. We'll see you guys tomorrow.